Welcome to the Colorado Real Estate Leaders Podcast, brought to you by Trailstone Insurance Group, bringing you interviews with Colorado's best real estate and mortgage professionals, empowering you to understand the current trends in the housing market so you can make the American dream your reality. Enjoy today's episode.
Well, it's a great day in Colorado, and welcome to the Colorado Real Estate Leaders Podcast. Today we have with us Stephen Andrus, who's a mortgage loan officer with Integrity Mortgage and Financial. Steve, welcome to the program.
Thank you. Thanks for having me, Mike. I really appreciate it.
You are welcome. Well, I like to always get started with learning about you. So tell me your story, what's your background, and how did you get into the mortgage industry?
Absolutely. So I got into the mortgage industry a few years back. I was working as a health insurance agent. I had some money saved and I went to a few banks to try and kind of qualify for my first home. I had no idea how anything worked, didn't know what a mortgage was, didn't know anything, but I kind of got turned away from a few people and I got really frustrated because I had good credit score. I had, what I thought was a lot of money saved for a down payment. And I just couldn't kind of break the barrier to kind of get anyone to take me seriously. So I started studying, for my loan originator test, went kind of through that process, found out I was pretty qualified, and I just kind of needed like a broker or like a correspondent lender to kind of take a look at me. And then after that, was a really natural transition to kind of just applying, getting in with some people who I kind of agreed with their thought process on how business should be ran, and kind of helping people and leading with knowledge. And that's how I got into what I'm doing. And then I actually just closed on my first house 2 months ago, so it's all going very well that way.
Awesome. That's really neat when you hear like, I tried doing it. I didn't have a wonderful experience, and I just thought that maybe a bunch of other people would feel the same way. So why don't I go ahead and do it and really give them spectacular service and really treat them right?
Absolutely.
So what type of clients are you working with? Do you work with, home buyers? Do you work with investors, people that need refinancing, or do you have a specialty?
I would say my specialty is first-time home buyers, people who are kind of in a similar situation that I was in, who feel like maybe they're not getting a fair shake or they just don't understand why they don't qualify. So I really try and, let my clients have as much knowledge as possible. I set people up on 1 to 2 year plans if they're far away, if we have, pretty big issues we need to work on, like saving for a down payment or working on like our credit scores. But that's kind of the waters I like to swim in. And then I do a ton of VA loans as well and cash out refinances if people have, debt that we can kind of make cash flow better for them. Those are the waters I like to swim in though.
Yeah, I think that a lot of times people do have misconceptions about, buying their first home. And if you come from another area, sometimes the Denver market is a tough one to get into because the prices tend to be a little higher. What are some of the things that you are seeing that first-time home buyers are struggling with, and you are able to really serve them well teaching them?
The biggest misconception I see is a lot of people think that you have to have 20% to buy a house, 20% down payment, and just not true. If you have like a qualifying credit score, just for an example, if you have like a 680 or above, you can put 3% down with a conventional loan, through like a Home Ready or Home One program. So I like helping people who just, need a little bit of direction that way. The other thing is if people are struggling with like a credit score, just putting them on the right path and kind of consulting with them, taking calls as they need, rather that be once a week or once a month, just to kind of explain, hey, my corny little joke is it's kind of like a financial diet plan. I can help, tell you what to do. I can't make you do it, but these are the steps I would take, and this is kind of how we get there. But those are the kind of the biggest things I see people struggle with that need to, kind of go from point A to point B to qualify for a home. And those are things I can absolutely help with too along the way.
And I'm sure that there are other lenders out there because there are many, many, many lenders, right? Bank, brokers, and all that. But I'm sure that sometimes a first-time home buyer might tell you, I went to this other place and man, I just felt pushed. And when I wasn't ready to buy right now or didn't have the good credit score, they just dropped me like a hot potato. So I think that your approach of working with them, teaching them, even putting out a plan for, like you said, a year or two, that really resonates well with people because then they really realize you are treating them like a human.
Absolutely. Because everyone wants, this is one of those businesses where you can make quick money if you want to, and you can only do very easy transactions. The goal is to help as many people as possible though. So if you can help people and, kind of build clients for life is the line I like to say. But, if we can help get someone to homeownership, even if it takes 2 years, I think that's more valuable for people than just kind of doing, this is my fifth house, I just want a quick transaction this month type thing.
Yep. What when you work with people with their credit scores, what are some of the easiest and quickest ways that you have found to help increase the credit scores?
Big thing I like to preach, if anyone's a loan officer listening, you heard Dave Luna tell us this on our continuing education, but 10% credit utilization is huge. So a lot of people say go 20 or 30% and not over. I'll tell people to open 2 to 3 credit cards. 3 is ideal if they don't have any credit cards at all. Don't utilize more than 10% of the allowable balance. Pay that off monthly. That builds credit pretty quickly, as well as kind of self-reporting your utilities to the 3 main bureaus. That can help build credit. And then everyone's situation is unique. So if we have certain derogatories, student loans, things like that, that's kind of where I dive in. I give some more specifics for each person's kind of situation. But generally, the 3 credit card thing is a good way to start. If you're a kid who wants to buy a house, have no credit, that'd be the first thing I tell you to do.
And so thinking out loud, using the 3 credit card, what if someone has 1 credit card and it's kind of maybe not maxed out, but 3/4 of the way maxed out? Then would it be smart, am I understanding what you're saying correctly, where, hey, go ahead and open up 2 more credit cards and then let's shift the balance of the 1 credit card to spread out across the 3, and maybe you're close to the 10% mark, but at least you're not all in on, 1 credit card. Now the bureaus see 3 lines of credit and they're not all utilized.
Absolutely. That, and they're going to see those 3 payments continuously kind of knocking at or chipping at that credit to go down. So that's a good way to kind of start. And that's exactly what I tell somebody, if they have 1 card that's kind of, maxed out or close to, that's one of the first strategies I like to implement with people.
And something that I've heard over the years, and maybe this is not accurate these days, but maybe it's just an old wives' tale. But maybe somebody has an old credit card and I don't use it, but it's still active and it's got a 0 balance. I'm just going to close it down. Well, that actually is a bad thing because the credit bureaus like to see longevity. So you might have had it open 10 years ago and it has 0 balance. Leave it open.
Absolutely. And that's a pretty common question, actually. A lot of people say, oh, I have this old card. Yeah, I'm just going to get rid of it so we can start everything new. And that's actually a huge asset as far as your credit goes. So I always say, just go buy, a week of groceries, pay it off as soon as you do that. And, let's kind of keep that open. But that trade line's huge. That's a big impact on credit scores.
Yeah. A lot of people just think, pay your bills on time and don't have bad credit. And that's, of course, obvious. But some of these tips that you're mentioning are getting into the, advanced ninja strategy. So I'm glad to hear that. I'm sure there's many, many more. But the neat thing that I'm hearing you say is when you're working with the client, you can look at that and go, okay, if we could just do it this and this and this, and let's give it 2 months or 3 months because it's fitting in your time frame anyway, you're able to really serve them really well with giving that type of advice. There's nothing that happens overnight. You see these commercials like Boost, and it's not an overnight thing, but you can guide them to tell them some of those tips.
Absolutely. I do have a few tools I work with that, like, say we need 5 or 10 points on like the mid-usable FICO. We have like a credit expert, things like that we can use, but generally it's not necessary. If people we start, 3 months out, we can kind of get people where we need to be most of the time.
Yeah. So tell me a little bit about the type of loan programs you have for first-time home buyers. You mentioned the 97% or the 3% down. What other programs are out there? And then what other kind of buyer down payment assistance programs are available?
Absolutely. The other obvious one most people think of as like a first-time home buyer program is an FHA loan. Doesn't have to be for first-time home buyers. I work with people who have multiple FHA loans all the time, but that is nice because they don't have as strict requirements. You can have a lower credit score. Generally, we want you about a 620 in my little world, just because that's where you get a little bit of a break on the rates. We have 620 credit score, 3.5% down. That's kind of a really affordable way to get in. And like I said, they have kind of less stringent requirements as far as work history goes, so easier to get in that way. And then if someone really wants to kind of get into homeownership, they don't have down payment saved, but they're interested, they have a good 2-year work history, a lot of things line up except for, maybe savings or kind of the financial aspect as far as down payment goes. I work with a down payment assistance program called CHAC. They'll give up to $15,000 towards down payment. That can be towards closing costs. They won't do rate buy down, but just about everything else in the loan they'll kind of help contribute towards. that's a really useful tool to kind of help people get in the door. I also am a fan of USDA loans, just because you don't have to put anything down for a USDA loan. It's definitely a little bit more specific. I won't recommend that unless after our conversation you tell me, hey, I want to live rural, or I have a dream of kind of being on a farm or kind of living a more agricultural lifestyle.
Yeah.
But those are a few things I definitely, those are my bread and butter to kind of help people in their put people in their first home, excuse me.
And along with what you said previously, which is VA loans, because those are zero down payment loans for veterans, right?
Absolutely. And I love working with veterans as well. That's one of my favorites. That one I almost don't count in that same category because it's such an easy program to work with. It's not, I don't call it a down payment assistance program because that's kind of the benefit for serving. That's what they get for doing so much for us. But VA loans are the best loan out there for my money, though.
And isn't it true that some military and veterans, they don't even know that that's an available benefit to them in some cases?
Absolutely. Yeah. I've had a few within the past year who weren't sure how that worked, or they thought that their disability rating might hurt them. That actually helps you if you have over a 10% disability rating. You don't have any funding fees. So that could be a huge advantage. But yeah, just kind of getting the knowledge out there is big, I think.
And then, so let's say that you were mentioning the FHA loan or the down payment assistance. That might be your stepping stone to get into the market. But then, from your planning perspective that you were mentioning, what is the next step that you're going to say to that first-time home buyer to say, okay, let's keep an eye on the market, because in this period of time, if the house goes up in value and if you develop some equity and you pay down this, what then could be the next step? So, a lot of times people aren't going to live in the house 30 years, but maybe 3 to 5 years down the road, there could be another transaction that could benefit their situation.
Absolutely. And that really does kind of fall in a case for case kind of situation. But what I always tell people is the main goal of getting the house is so we have equity in the house. That way, if we have financial hardship down the road, we can do a cash out refinance. We can take out a home equity line of credit. We have a few tools where we can use this house to kind of help us financially. Or, best case scenario, since we live in Colorado, everything seems to go up in equity pretty quickly. Stay in the house 5 or 10 years, sell it. If our credit's kind of in line and our credit scores have raised, get into a conventional loan, put less money down on the next house, don't have your mortgage insurance. Usually an easy kind of transition. Just depends what people's goals are, though. But the big thing is you always have that cash out refinance option, though, just in case things get hard or if you want to pay down the loan a little bit more.
So 2 things that makes me think of is conventional loans. We don't need to get into the weeds, but you mentioned mortgage insurance. Well, with some loans, the first-time homebuyer type loans, you're going to have, principal and interest in your taxes and insurance, but you're going to have that mortgage insurance in there because you put a small amount down. And that could be a healthy amount of money, whatever amount that is. But if you did what you said and you've been paying down on the loan, making regular payments, and the value's gone up, hey, let's take a look at the rates now that has been 4, 5, 6, 7 years, because now what if we can move you into a conventional loan? It gets you a whole better package, because if you can eliminate that mortgage insurance, that really helps their situation out, right?
Absolutely. It's one of those things where we'll do a refinance, and especially now's a unique time because the rates were so low, during kind of COVID. Now they're a little bit higher
normalizing
than we're used to. Yeah. They're not horrible, but they're more than, they're not the 2s and 3s anymore. But even with, I've refinanced a few people in the past year who had a 2% loan all the way up to like a 6% loan, for example. But because their cash flow was so much better, literally $600 better cash flow because they had that we had to pay off. That was just high compound interest. It can make sense. So that's always kind of my thoughts is it's not just the rate. It's not just 1 or 2 factors. This is such a complex living, breathing thing. It's kind of important to have someone kind of just view it and say, hey, this is what I think the tangible net benefit could be for you. Would you like that, not have mortgage insurance and, have $600 more a month? That's kind of the problems I like to solve, though. That's what I like to try and present people.
And then, so let's say, like what you just mentioned, there's why in the world would anyone in their right mind go from this rate to a much higher rate? Well, the net result is we're going to increase your cash flow by X. And if it could be several $100s of net cash flow, cash in your pocket, that would make a good amount of sense. What do then you tell them to do with that cash flow? Because let's hope that it's not like go out there and respend it, but there's some wise ways to use that cash flow, right, to maximize that.
Absolutely. So cash flow is always king. That's kind of one of the things I I will tell every one of my clients 100 times throughout the course of our loan. But anything we can do to increase cash flow is huge. Rather that be paying off debts, rather that be paying off, the big installment loan that's your new car. Those are kind of the big things that would help increase that monthly. And then if you have goals of saving for your kids' college fund or what have you, I have people I can help with that as well. For things like that, I work with a lot of financial advisors too, or we like to kind of be on the same page, set out a financial plan, whether it be a 5, 10-year, 15-year plan, and kind of go that way. But whatever someone's goals are, the biggest thing is to help someone kind of do what they want with their money. And then I'll say, hey, what I would do hypothetically is X, but you can do whatever you want. But this is going to make the money last a little bit longer, potentially.
Yeah, this makes logical sense, because if we do this transaction and it frees up this much cash flow, and what if we put it into this, chart here where, look, we're going to get some tax advantage or some investment. And again, you're working with professionals on your team that can put together some of these estimates. It really makes them realize that, wow, this mortgage and your advice is becoming the linchpin to getting bigger and better things. And you really feel like they're, in control of things. And I think that that's such a huge opportunity, rather than just like, here's your loan next.
Yeah, absolutely. The big goal is that you're using kind of your home as a tool for whatever you want, rather that be a bigger home, rather that be home improvements, rather that be savings for another big purchase. That's what I like to try and help people with, and say, hey, this is what we can do, and this is what I'd potentially recommend. But that's always the goal. Because
time flies. You're going to be living in that house, for 2, 3, 5, whatever the time frame is. But before you know it, all of a sudden it's like, wow, have I lived here for 5 years? Wow. Yeah. And so, if you put a good plan into place and you stick to that plan, boy, you start seeing some dividends and some benefits and things like that. And you just have to get that right advice. So it sounds like you are just really doing well by your clients and educating them, Steve. And that's music to my ears, because too many times there's the horror stories of people going, I didn't understand at all what was going on, and then I found out it was a bad loan. Wow, that would just be so devastating to hear back that someone was so confused and got a bad loan, but you are really saving them and making sure that they're getting into really the best program for them.
Absolutely. The main goal is education. I want people to understand kind of what they're signing up for. I don't want anyone to ever feel like there's a hidden fee or something that wasn't disclosed earlier. So kind of going through the locked loan estimates, going through those closing disclosures line by line, I pride myself on doing that, just so everything makes sense and there's no questions when we get to the closing table. It's just a fun, sign a few checks, here's the keys to your new house, or here's, your cash that you want, in hand type thing. But that's always the goal, just to make it as easy and stress-free as possible, because it is an extremely stressful situation, purchasing your first home and making one of the biggest investment purchases of your life. I completely understand that.
And then maybe getting with you every year or so to just have a double check. Hey, let's look at the rates. Let's look at the loan program. Let's just kind of do a quick mortgage checkup just to make sure that I'm in the best program. There's not opportunities. And many times I'm sure if you do that, it's like, yep, you're good to go. Okay, great. Have a nice day. But I think if you see an opportunity, it's like, hey, look, it's been a few years and now, you're just in the mode of kind of like that annual review. It really serves your clients well.
Yeah, and I'm very big on the annual mortgage reviews. Those are something that not only help me, but really seem to help the clients. And that way, like you said, even if things are good, just say, hey, cash flow okay, are we comfortable? Yep. Let's move forward. Or, I have teams of people I can help with. Rather, we need a family estate lawyer, a CPA, insurance professionals, obviously, like yourself. We have a ton of people who can kind of help, or, at least point you in the right direction to kind of get where you're trying to go.
It just lets people realize that they don't need to be the expert in all areas financial, that you've got a team watching their back. So I think that is so amazing, Steve. Well, thank you so much for coming on. If someone is interested in reaching out and connecting with you, what's the best way that they can do that?
So every one of my clients gets my cell phone number. So I'll give my cell phone number. It's 785-341-9045. Call, text, wherever you want. I'll post my email as well and everything that this podcast is on. But I like to do everything with a quick phone call, just real informal, just to kind of get a baseline and then move from there.
Excellent. Well, thank you so much for coming on. It was a real pleasure talking with you.
Thank you. I really appreciate you guys having me.
Thank you for listening to the Colorado Real Estate Leaders Podcast, brought to you by Trailstone Insurance Group. To learn more about the topics mentioned on today's show or listen to past episodes, visit www.coloradorealestateleaders.com.